Hello there. Welcome to the third lecture of the day trading model. This lecture is going to be about time. Before we start this lecture, I must first give you a risk disclaimer. I am not a financial advisor. Everything that I say and share within this lecture is meant purely for educational and/or entertainment purposes only. If you want to read the full risk disclaimer that you have agreed upon when subscribing to the mentorship or joining the ones that know, you need to go to our website and you will be able to read it there. Before you watch this lecture, I must share something with you, and that's the following. You need to know how to determine the order flow. If you do not know how to determine order flow, this lecture will do you no good because it's above your current level of understanding. Next to that, you need to know how to determine the draw on liquidity. Again, if you do not know how to determine the draw on liquidity, this lecture will again be of no benefit to you just yet. You need to know how a true market maker model functions and its characteristics, because again, if you do not understand the full inners and outers of the market maker models, this lecture will do you no good, because time is by far the most advanced concept to even discuss, but also to learn about. This is not me saying to you don't watch this lecture. Of course, you should definitely watch it, but first make sure that you have these three things noted correctly within your notes and that you have studied them at least and that you have followed on through the homework assignments that have been provided to you during the past two lectures. This is me as a mentor guiding you in the best manner possible, and this is not me saying, okay, don't watch this. This is just me giving you reasonable advice and saying, okay, you should first do this, and then when you understand that, come here. So let us take a look at the table of contents for this lecture. This lecture is going to be the longest lecture by far so far of the model series. The reason why this will be the longest lecture is because, again, time is the most advanced concept that you can discuss. And therefore, I want to go in great detail with you with sharing how I interpret time and utilize it within my own trading. So first of all, we're going to take a look at the sessions of interest. These sessions are the following. First of all, we're going to take a look at the London session and the characteristics that are present during London. After that, we're going to take a look at the morning session. And finally, we're going to take a look at the afternoon session. As you may notice, we're not going to look at the Asia session because in my opinion, Asia is not a great session to trade. So let's begin with the sessions of interest. For Forex, so for trading, for example, Euro or GU, your focus should be on the London and morning session. The afternoon session can be skipped for Forex. The reason why this is my advice is because the London and morning session usually provide the most volatility for the main markets of interest. And therefore, I would always look for setups in Forex during the London and morning session. For the index futures, I would focus on the London, morning, and afternoon session. However, here comes something very important. Please do not try and trade every session. You should pick the session or sessions that suit you best and let go of the others. If you notice that, for example, the London session fits best in your daily schedule, due to, for example, work or due to a personal life, etc., then your focus should just be on the London session and you should ignore the morning and afternoon session. If due to your personal routine, the morning session fits you best, focus on the morning session and let go of the London and afternoon session. If, for example, the afternoon session fits your schedule best, focus on the afternoon session and let go of the London and morning session. If you want to take it a step further and you are full-time, then I would suggest every single index futures trader to look both at the morning session and the afternoon session. During this lecture, I will share very specific time windows during which we will be looking at the morning and or afternoon session. We will not be stuck to our charts all day because that's not effective trading. Effective trading is the following. You know when and where you're looking for very specific things to occur. You're not looking for, oh, I see a breaker setup, therefore I'm going to trade this breaker setup. No, that breaker setup will only be valid during the right period of time at the right point of interest. And that's where I'm trying to guide you towards. Here we can see the sessions and their time-based draws on liquidities. As we can see, during the Asia session there are no significant draws on liquidity. During the London session, our eye is drawn to the Asia high and low and to the previous day high and low. During the AM session, our eye is drawn to the London high and low, to the Asia high and low, and to the previous day high and low. During lunch, we usually sit on our hands, and during the PM session, our focus is drawn to the lunch high and low, to the AM high and low, to the London high and low, to the Asia high and low, and to the previous day high and low. As you may notice, there are 5 boxes, 5 significant time windows that I look at. The reason why there are 5 significant time windows has to do with the following. I try to look at sessions purely, but within the sessions themselves, I divide the sessions into 3 parts, and that's something that we will discuss during today's lecture more in depth, why I like to do that. Before we begin with looking at the sessions, I must first share an important note with you, and that's the following. We will discuss delivery profiles. Each scenario has its own characteristics. Our job is to determine what scenario is likely to occur. This does not mean that every single day there will be a profile that we would be able to engage in, and that's okay, because not every single day is a trading day. Later on, within the model series, we will discuss environment selection more, and then we can basically already see when those profiles that we will discuss today will likely occur and when not. And the days on which they are likely to occur, we need to, of course, be present. That's when our shop is open. That's when we allow customers, which are setups, to enter the store, and we can either treat them in the right way, or we can let go of them and just ignore them and don't service them. These delivery profiles do not occur every single day, and therefore you cannot force their occurrence. You need to wait and see whether or not the signatures that we'll be discussing today are present on the day that you're looking at if you are looking for setups to form. So let us take a look at the scenarios within the London session. First of all, the main question that we will be asking ourselves if we take a look at London is the following. What has Asia done? The first model that we will be discussing in a bit is the Asia high, purge and revert model. After that, we will take a look at the previous day high, purge and revert model. Then we will discuss the Asia expansion model for shorts. Then we will take a look at the Asia low, purge and revert model. After that, we will take a look at the previous day low, purge and revert model. And then finally, we will take a look at the Asia expansion model for longs. So let's take a look at the Asia high, purge and revert model. For the Asia high, purge and revert model, we will be looking at the following. We will be looking at, first of all, a market that is predetermined to go lower. So from the higher time frames, we have established that the market is likely to draw lower towards a sell side objective, a key liquidity pool, or to an old imbalance that price is likely to revisit. When we know that, and we have seen that Asia consolidated, then what we will look for is for a run higher around 2 a.m. towards the Asia high, and above the Asia high, we want to see the signatures occur that we have been discussing during the model series. So for example, the left side of the curve, their respective discount arrays get violated, or a lower time frame breaker setup forms, market structure shift pattern, change in the state of delivery occurs after the Asia high gets purged. During what time? During 2:30 to 4. If no reversal occurs during 2:30 or 4, I would walk away from the London session. From there on, I want to see displacement to the downside occur, and I want to see sell side delivery occur. What would be the first drawn liquidity? The first drawn liquidity would be the Asia low and secondly, that higher time frame objective that price is likely to draw towards. The second model that we will be looking for during the London session is the previous day high purge and revert model. This model again occurs when the higher time frame order flow is bearish and we're looking for lower prices. What we will be looking for is a run higher to originate from around 2 a.m. and from there on we want to see the market draw towards the previous day high. When the previous day high gets traded above, we will be looking for signs to confirm a smart money reversal during 2:30 to 4. During this time window, we want to see a high form above the previous day high, and we want to see a change in the state of delivery occur on the lower time frames. From there on, we want to see displacement lower occur, which confirms that sell side delivery is likely to be next. This is a rather simple model that can be spotted quite easily when we take a look at previous day highs and how London trades above them. This scenario sets up a classic sell day in which London creates the high of the day, it expands lower, AM retraces and then continues the London trend towards that higher time frame objective. The next model that we will be looking at is the Asia expansion model for shorts. This model sets up when Asia is an expansion leg lower, so that means during the Asia session we saw speed and velocity to the downside. Then from the midnight opening or around the midnight opening, we want to see a retracement occur into an imbalance that formed during the Asia session. This run higher traps retail buyers into believing that higher prices are likely to be next during the London session. The market reprices into that inefficiency. A lower time frame market makers sell models smart money reversal forms inside of that CB. And from there on, we want to see sell side delivery occur. This model again occurs when the higher time frame order flow is bearish and price is drawn to a higher time frame sell side or inefficiency objective. This retracement leg usually forms the high of the day for the market to then continue lower, and this model occurs within fast markets. Again, we want to see the high form between 2:30 to 4 a.m. The next few models that we will be looking at for the London session are the same models but then for longs. So what we're going to look for is for a Asia low purge and revert model, in which we want to see that Asia has engineered liquidity on both sides of the marketplace. And from there on, we want to see that around 2 a.m. a manipulation run lower occurs, purging the sell side liquidity below the Asia low. A smart money reversal forms here during 2:30 to 4. And from there on, we want to see that market shows a willingness to trade back above the Asia low and show lower time frame change in the state of delivery signatures to continue price higher towards the Asia high. This model sets up when the higher time frame order flow is bullish and the market is drawn towards buy side liquidity or to an all-in efficiency. You might be wondering, Zeus, why are you putting emphasis on around the 2 a.m. window? Because around 2 a.m. you will usually see a volatility injection during the London session. That volatility injection can be utilized for manipulation purposes. If there is a news event during the London session at a specific time, that news event is released, could also be utilized for that final manipulation leg towards the point of interest, which is the Asia low, from which a smart money reversal can occur to reprice higher. Now we're going to take a look at the previous day low purge and revert model, where we see that around 2 a.m. a manipulation leg begins, market draws towards the previous day low. The moment that the previous day low gets purged during 2:30 to 4, we're looking for signs of a smart money reversal occurring below that low. And from there on, we want to see price trade back above the previous day low to confirm a lower time frame change in state of delivery. And from there on, we want to see a buy program unfold towards the previous day high if the higher time frame order flow is bullish. The next model will be that Asia expansion model, but now through longs. This model occurs when we see an expansion leg during the Asia session. We want to see a manipulation leg lower originate from the pivot opening, and then we want to see price trade into a imbalance that formed during Asia in a discount during 2:30 to 4 a.m., where we will be looking for a lower time frame smart money reversal to occur from to target buy side liquidity next. The buy side liquidity that we will be targeting is above, first of all, this high and the buy side liquidity that was engineered in the past where the market is drawing towards. This retracement into that Asia imbalance usually sets up the low of the day, and this occurs during very bullish market environments, and this is the first step to seeing whether or not a classic buy day is likely to unfold, where London forms the low of the day, and we can then look for buys during the AM session as well if the higher time frame objective has not been met just yet. What's important to note is that what I shared with you so far with regards to the London session is rather simple. It's rather basic when it comes to determining point of interest and what to look out for. And the reason why I'm keeping it simple for the London session is because of the following. London has a characteristic where if you are looking at index futures, its respective 90-minute cycles delivery are not that clean compared to the AM and PM session. If you are looking at London for example, EU or GU, then you will notice that what you will be able to do is that when you have established that a higher time frame POI is, for example, a BC that forms during Asia, you will notice that during the first 90-minute cycles of London, which is 2:30 to 4, you will see that if you fractalize that 90-minute cycle to 30-minute windows, where you have 2:30 to 3, 3 to 3:30, 3:30 to 4, you will notice that if 2:30 to 3 doesn't yet trade into that imbalance, 3 to 3:30 will form the low, and from there on 3:30 to 4 will confirm the smart money reversal. This is something for you to look into, and when we discuss the 90-minute cycles more in depth during the AM session in a bit, it will be more clear to you to how to apply this logic. So to finalize the schematic that we've been discussing so far during the past few lectures, we have the following schematic, where if we are bullish, we are looking for the following. We are looking for sell side delivery to occur into a point of interest, into a discount array or a PXL, for example, previous session low, specifically the Asia session low or the previous day low, during 2:30 to 4. And from there on, we want to see buy side delivery next if the higher time frame order flow is bullish. It's important to note that time cycles, they shift. So that means that you should be flexible when it comes to, for example, saying, okay, I want to see it specifically occur during 2:30 to 3 or 3 to 3:30. That's why I've given you a 90-minute window to look out for. When we take a look at the bearish example, we are looking at the following. We are looking for repricing higher into a point of interest, into a premium array and PXH during 2:30 to 4 a.m. Again, this occurs when the higher time frame order flow is bearish, and we want to see a smart money reversal occur within that point of interest during the right time, and then we want to see sell side delivery occur next. So to summarize, here are the times of interest for the London session. During 2:30 to 4 a.m., I want to see a smart money reversal form. If no reversal is present during this time window, I will walk away from the London session. I need to see an expansion leg during 3:30 to 4 a.m. towards the targets. If, for example, the smart money reversal occurs at 2:45 a.m., I don't anticipate the market to go sideways until 3:30 a.m. I want to see it begin to expand from at least 3 a.m. on. So that was